Yeah, cool. So we have around, I guess, 1 to 1.5 or even 2 hours to talk about my favorite topic, pitch decks. I will try to make this session as effective as possible for you guys. So obviously that means the more questions you ask, the more value you can get out of it. And especially if I were you, I would always think on how can you adapt the things that I'm saying for your own pitch deck. So in the best case, you would leave this room with a list of things that you can actually change in your own pitch deck and then make it better 2 times, 3 times to what it is right now. And to start with that one, before I start saying anything, I would ask you to take maybe 3 minutes in quiet, open up your phone app or your notebook and just write down all of the questions that are in your head around pitch decks, around fundraising, and just write all of them down. So that before I start with the presentation, we can quickly collect them and then maybe I can try to answer some of them during the presentation. And for the ones that I'm not answering during the presentation, I can obviously answer them in the one-on-ones or later today at the lunch break. So please everyone, take 3 minutes, just write down literally everything. There is no stupid question and also all the questions that you always wanted to ask. All right, so thank you so much for all these questions. If we can cover 95% of them, I think we will be very, very happy at the end of the session. And there were a lot of valid questions in there that also don't have a clear answer. So that's very, very important to know for everything that relates to pitch decks, because obviously you ask 10 different people and 10 different people will tell you 10 different answers on this. How I'm seeing it, a pitch deck in the first place is about getting the foot in the door. And it should be de-risked in a way, how I would say it. So we shouldn't be the one reinventing the wheel with our pitch deck. But we will come to this a little bit later in the presentation. So yeah, basically let's kick it off. And here we go. So if you are checking the news out there and you are following a lot of the tech news, it always feels crazy, at least from my end, because you see all these massive numbers of what startups are raising every single day. So I always had the feeling it must be super, super easy to raise funding, because if some pre-seed startup raises, I don't know, 5 million or something, and I want 500K, how is it not possible that I can get this money? But the thing is that obviously the tech media, they show the success stories and they never show the ones that try and don't make it. So that's super, super important to know. And so I was always, money is flying around and just give it to me and then I will build my great company. But the reality is that fundraising is super, super hard. And every company that will manage to fundraise from investors is 1 out of 100 or even 1 out of 1,000. So if you have raised some money before, you are already in those. And also if you are trying it for the future, that means you need to beat the odds. It's not easy to fundraise and it's not a walk in the park. So you need to come well prepared on both the fundraising journey, but on the other side also your business. Yes, a shit business can also raise funding, but most of the time that's not the case. And so we want to make sure that we are very, very well prepared when we are doing all of this. So this photo is very, very old. It was, I think, 2013 or something when I was creating my first company. My first company was in education. And the name was Study Help. In Germany, we were trying to bridge online and offline education in some sense, because back then e-learning was coming up. And we thought, okay, there's a huge opportunity, because all of the old players in the industry were really shitty, to be honest. So the problem was, when we started, we were going quite well. So what we had were thousands of customers, we already had a couple of hundreds of thousands in revenue, and we had a working product. So normally you would say, okay, that is pretty good, and we were just doing it while we were studying. So our idea was always, okay, we are reinvesting, growing, and we never really thought about funding in the first place. So we were always thinking about how to make money and how to actually grow the product. The thing is, also what we didn't have, and this is super, super important, is we didn't have a clue of how the VC world works. No idea out of that. Also, we didn't have any connection to experienced founders or investors. So the thing that you are having here, we didn't have it back then. I couldn't ask these questions, so I needed to figure it out myself. when we were doing it. And then third up, we didn't have a convincing pitch deck for sure. So what happened when we tried to raise money for the first time? You can see the investor funnel there. I was just putting small amount of investors in my funnel. I had a super shitty pitch deck. And in the end, we didn't raise any money in the first place and were super, super frustrated because we thought, how is it possible? We even have revenue, we have customers, why don't you give us any money? And then something interesting happened because I got super, super passionate about the topic itself. I wanted to understand how this world works. And since then, a lot has happened basically. And I taught myself everything about the venture industry from mentors myself, trial and error, reading, and being in the industry for quite some time. And so over the last 10 years, I have gained a lot of knowledge, and specifically about fundraising and pitch decks, I was luckily able to share some of the stuff that I learned firsthand on accelerators like this, but also on Forbes, Inc., or any other publication on there. And I think what makes me special, or how I give out the knowledge, is I've been sitting in the shoes of you guys when I was raising for my company, so I failed myself and I can talk from these experience. Oftentimes, obviously, mentors are also coming from the VC industry and they've never built a company themselves, so that they can just talk from their experience and their expertise. It's also valuable, but I think the whole mix is what it really, really makes. So, about this experience, so that I build up some trust with you guys that the stuff that I'm telling you is actually legit. On the top, I've raised money for my own businesses, around $5 million. So on my education business, but also several other businesses. Then on the bottom left, I have invested in over 25 companies all around the world, because at some point, as I said, I wanted to understand how this world works. So I started to invest, and also that was a crazy mindset shift, because now I saw, okay, how am I reading a deck now from a startup? And sometimes I caught myself like, it's crazy. I'm skipping through this deck in half a minute or something, and there was someone preparing it for hours and hours, and I don't give them even the chance, but that's the reality. And then third up, I already mentioned it yesterday in my introduction, I was running a business that was called Base Templates. At Base Templates, we were selling pitch deck templates. There's a lot of education around financial modeling and all sorts of stuff. And in that business, we have helped raise companies over $100 million with our services and our education. We sold that business 2 years ago, so I'm not running it anymore, but it was a super fun journey. So 3 different areas from which I can share the experiences today. What am I doing actually day to day these days? I'm running a company that's called Wizard Ventures. So it's an internet holding company, as we say it. We are building companies ourselves. Yeah, like a venture studio, basically. And we are incubating stuff ourselves, but also we are acquiring companies. Why? Because I love to be closer to the startups, basically, and don't just passively invest. And on the other side, obviously, I also see a lot of businesses that can be done, that could be interesting businesses, but that are not venture scale. So for us, there's no requirement for a business to be venture scale. Also, other businesses can be great businesses. The goals for today, what I want to share with you is, I want to share with you what a good pitch deck looks like. Then I want to talk a little bit about what investors are really looking for, and I want to answer all of your questions. And I would ask you now, like everyone, please raise their hand if you are super, super happy with your pitch deck as it is right now. Okay, so one person, good. So we have some improvement options. And now I would do another round and toss around the microphone. Please describe in one sentence what you believe a good pitch deck is like. So what makes a good pitch deck? One sentence. Okay, so basically I would agree with everything that you just said, because this is all part of a great pitch deck, obviously. But for me, if I would condense it down, I want to have the person that is looking or reading the pitch deck, they should be like, okay, I want to learn more. So it's the first step in a long journey with them, and we want to open up the discussion with them. That's what the pitch deck is for, and that means we need to tell a great story. We need to talk about the problem, the solution. It needs to be short, and really getting them excited. But that's the thing. The call to action at the end is, okay, we continue our discussions afterwards. Okay, so today let's take a look at a couple of things. So first of all, in the journey of fundraising, there you will start with a reason and objective for your fundraise. Second up, some homework for us. We need to understand how investors tick so that we know how to play the game. Third up, preparation. That is a lot of the stuff that you need to do in your office, building the actual deck. And then we have the process itself and closing the deal. So let's start with the why. So the most important question is obviously, most of the time if you are doing a pitch deck, you are doing it to raise money with it. Obviously you also have pitch decks for your clients, for example, or if you're on an event. But today, mainly we focus on a deck that is made for fundraising. So there are a couple of bad reasons, obviously. So funding in the first place will never be a substitute for sales and revenue generation. That's super important. The best form of funding will always be money that you get from your customers. Because your customers, if they are buying your solution, you have a proof that there is a need for the solution, and obviously the more you have out of that, the easier the fundraising will also get. Depending on the business, sometimes it's easier to already get it before the fundraising, sometimes it's not possible, but in general it's never a substitute. Because if you are building a business, at some point it's always about making money. And at least in my definition, you don't have a business if you are losing money all the time. So there are some venture-backed businesses, obviously they are losing money for 20 years or something, but 99.999% of the businesses should be earning money somewhere before that. Funding will also not help you to solve your product market fit problem. So sometimes you can take a huge chunk of money, just throw it on some marketing channels and people will sign up. But if your product is not sticky enough, then you haven't fixed it. Next up, sometimes I have heard people say, okay, everyone is raising funding, so I'm also doing it. You don't need to raise funding. There is no need for that. There are a lot of businesses out there that are also happy without fundraising. And also one thing that I did myself, I raised funding and then I started to spend it stupidly. Because once there's money in your bank account, obviously you start spending because you want to invest and grow. But the risk is pretty high that you're spending it on stuff that you shouldn't spend it on. So even if you fundraise, make sure to have your money on the right things. Then the good reasons is, if you already found product market fit or any sort of engine that you can scale. So let's imagine we did our test on Facebook, we paid, 5,000 euros, got 500 users, and then you saw over time you earned the money back. So now it's an interesting time because you can just spend more money, you will earn the money back. So this is a good point where you can use the funding. Second up, obviously you need to hire the best team because in the end, every business out there is built by humans. Up to this point, let's see when the AI agents are taking over, but you need to get very good team to make this company a success. Next up is to improve your product and solve real customer needs. So sometimes, obviously, you are talking to your customers, interviews, okay, you're learning, okay, product is not good enough, so we want to make it better. You can use funding to do that. And finally, and that's obviously the number one form why venture capital exists, there are some companies and some bets that you are taking that can be financed by yourself. So you need to take some external money if you are doing some research, development, for example, to get stuff done. In terms of the objective for the fundraising, obviously your goal if you are fundraising is to look at the next 18 to 24 months, I would say. So I wouldn't raise money that is below the 18 months, to be honest. Because if you are raising money just for 12 months, actually in 6 months or 8 months you need to start the next fundraise, and it always takes so much time and attention from you. So I would always try to raise a little bit more so that you have more runway. And in the end, you have the business on the bottom left and you want to grow it over the next 18 to 24 months to either then be profitable or raise the next round of funding based on the results that you were already accomplishing. The amount of money that you raise is obviously based on how much money you need, but also the valuation of your company and the funds that you use. Especially in the early stages, there is no specific company valuation where someone can come to you and say, your company is worth exactly 1 million, 2 million, 3 million, 4 million. So most of the time, obviously, if you are raising funding, the amount that you raise also results in the valuation of your company, because the investors don't want to dilute you too much. So if you are raising, let's say, 1 million on a 5 million valuation or something, then you will give away 20% or something. And if you would be raising 500K or something, then the valuation would be, I don't know, 2.5 million. So there's no specific mass to that in the beginning. So now for you, I want you to just quickly think about, if you would narrow down your objective for your fundraise, if you want to fundraise, or for building your pitch deck if you want to build it for clients. Just one sentence, write it down. What is your objective? Let's talk about understanding investors. So generally speaking, there are two big groups of investors. On the one side, angel investors, and on the other side, VC investors. There are a couple of big differences between them, because VC investors, they are often entrepreneurs themselves, or they were working, for example, in corporate, earning a lot of money. They are taking their own money and investing into stuff they like. Because they are using their own money, they don't have any specific guidelines in what they can invest in, and oftentimes also their expectations are different from professional investors. So let's say there's a startup, I like it a lot, but I know it can never be a venture capital case. And what that is, I will talk about it in a bit. I can still give you my money. Maybe I just enjoy doing it. So I would be okay if I get the same money back after 10 years or something. So super, super important to understand that. Most angel investors are investing in pre-seed and seed stage just because the tickets are smaller, and most people don't have like 10 million to invest into a Series A. Some have, most don't. And then you have VC investors. So VC investors, the important thing to understand about them is they are taking the money of other people and are investing that money for these other people into startups. So that means they need to get a return out of the money that they invest in, and the return is so important for them because their career is actually based on it. If they do a shit job, there is no business anymore, and then they need to find something new that they do. VC investors invest in all stages and deal sizes. So there are some investors that are doing it super early. There are some investors that are doing it super late. So you can find someone that can literally invest in any stage. And a lot of investors have a specific thesis. So you will find some investors that would say, hey, I'm investing in the Balkans. You will find some investors that will say, I only invest in SaaS companies, some in AI companies. And that's super important for you because obviously it's useless to talk to an investor that is not investing in Albanian companies, and you waste your time, you waste their time, so you need to make some research to make sure that you talk to the right ones. And now, the most important thing, if you just take one thing from today, it's this slide. Any investor will build up a portfolio of companies. So let's say we have 20 companies in here. I can invest in all of these 20 companies in this room. Then I have built up my portfolio. And now something interesting happens. Out of these 20 companies that we have, let's say 10, 15 at some point need to shut down. Okay, business isn't working. That's the normal game of being an entrepreneur. Not everything is working. So now I have a problem because 15 times my investment times 15 is gone. So now I only have 5 companies left. And these 5 companies, they need to cover all of the losses of the other companies. They need to cover the additional return that my investors want because their alternative is just go to the stock market and get like 7-8% per year. And they also need to cover the fees that I'm charging as the manager of the fund. And this is also a significant amount of money, what they are charging. So that means these 5 companies need to be crazy good. Crazy good in terms of the outcome that they can bring for me as an investor. So this is why most VC investors really looking for outlier companies. An outlier company is a company where we can 10x, 100x, or even 1000x the valuation from the point where I invest to the point where I sell my shares. It's the most important thing to understand if you are talking to those investors. So whenever you are putting any numbers in your decks or are pitching any vision, it's important that it's fucking big, because otherwise they don't care. If in the deck it stands, okay, my total market is I can do 2 million in revenue, 5 million in revenue, then even with the craziest multiple of selling the company can be worth maybe 50 million or 20 million. Most investors just don't care because the math doesn't work out. So go big if you want to go the VC route. One thing that I didn't understand, because I raised VC money and my company wasn't VC scalable. So it was clear we could never become a unicorn or something in that regard. And then obviously we had a problem because the investor was always pushing us super hard, like grow, 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 spend the money. And we were like, it doesn't make any sense. We don't know where to spend it on. And the company was doing good. We were doing a couple of million in revenue, profit, but they were like, we don't care. So just rather do the coin flip, try something else than just having a business with $1 million in profit. So that's super, super important to understand from the VC world. Okay. Then, in terms of the investment thesis, I already said different funds have different theses. Most of the time, it's the stage. So pre-seed, seed, and so on and so on. First level. Second level would be industry. So industry can be, I'm investing in software, I'm investing in AI, I'm investing in hardware. So this is also important. Third off can be geography, Balkans, Europe, US, global. And then also business model. So for example, some funds are doing consumer stuff, like ride-sharing apps. Some people are doing just B2B stuff. And there are also other things that you can look at, but obviously you need to be aware of the fact that this exists. Some companies though, so for example, Plug and Play, I guess they are investing global, they are investing in everything. So there are also differences, but yeah, you need to make sure you know it before. If someone would ask me, what are the 3 decision criteria for most investors? I would say it's these 3. Number 1, innovation. So the thing that you are doing, is this changing the world or is it just a minor improvement to something that already exists? All of the companies that are crazy successful, it's a big game changer. So for example, Uber, before it was an absolute pain in the ass to get my ride. It's so much more flexible, easier to do it now, so massive game changer. Second up is execution. They will look at you and see from the day where you started the company, what have you accomplished so far? And this is super important because this is an indicator how the trajectory will look for the next years. If you are just doing minor progress for 2-3 years or something, the likelihood is very low that now you are going to a hyperscale mode. So make sure to show actual progress in the stuff that you are doing. And for progress, we are coming later back to the traction slide because some of you were also asking. Traction is not always equal to money. It can also be other stuff that you can show. And then last but not least, credentials. Are you personally capable of doing this? Investing is always a people game. So if I give some of you guys my money, that means I'm trusting you with my money and you are the one executing on it. It's even more important than the business itself. Because if you are gone, then the business has a problem. And also you can see it often in the media if some guys, I don't know, the WeWork founder was raising 160 million pre-seed or something for his new startup. Obviously, it's not because the business is making any traction metrics or something. It's just because of him as a person, and the investors are like, okay, just take it, we trust you, you will figure it out. So we need to build up this trust. Now, reason is clear. Investors, we have a rough understanding, let's say. Let's move over to preparation. If I'm thinking about preparation for my fundraise, there are 3 major elements that I want to look at. First of all, my deck. We will talk about this now. Second up, my investor CRM. Investor CRM, my long list of potential investors that I can talk to. And then all of this combined by my fundraising strategy. So how do I actually want to do it and what do I want to sell them in the first place? So for this one, I mean, it's 4 things. So what are we pitching them in the first place? How are we pitching it? Because there are different ways to show the same things. What is the ask? And obviously, who are you talking to? So someone was asking about the adapting the pitch to different audience. Yes, obviously, the investor that I talk to can be super different in what they are interested in. Maybe if an investor really likes all sorts of subscription businesses, in the pitch I will just focus on my subscription part of the business, and someone else is more interested in, I don't know, the product itself. I will show them a demo and adapt it. So always give them what they want to hear, basically, like always a good salesman is doing it. So as an example, so we could say, hey, we are building a website in which you can book air mattress in private homes. It doesn't sound so sexy in terms of the pitch itself. But if I would say, hey, we are building the leading global marketplace in which traveler can book unique accommodations, sounds a little bit better, because what I like about it is like the uniqueness, and obviously that they are saying, global, nice. Global shows for me ambition. And obviously this is Airbnb. So if they would have sold it at the beginning, like you can get an air mattress in a private home, and they would have never taken off. But now they are ruling the world of travel. Second up, a friend of mine was saying, hey, we are building a customer outsourcing company. And I didn't like it, so what I would prefer would be something like, we are building the leading AI customer service technology that enables merchants to solve customer requests 90% cheaper. It's so much better, because now if someone looks at it, okay, I can save 90% of the money that people are spending on customer requests. It's insane, because the industry, I don't know, might be 50 or 100 billion or something, and there's a massive market to capture just by saving money. So to sum it up, investors want huge visions. So think for yourself, what is the craziest thing about your business that you can ever imagine? Really think big. Second up, as I said, for them, it's about upside potential and not so much downside protection. So as I said, they will get their money back because 1, 2, 3, 4 companies out of their portfolio are like breakout, doing absolutely crazy. So it's more important for them to find those than to negotiate the last 2% or something with a company in terms of the valuation in the earliest days. They want some product magic, so a product that is 10x better than what's existent out there in the market right now. And if you have something that makes you super unique and special, it's also obviously good, because there are a lot of people building companies, and most of the time they are seeing the same kind of problem that is being solved by different teams. So if you have something special, that's good. Okay, so now, after you've heard this, I just want you to take 1 minute, write down your elevator pitch in the craziest vision that you have for your company. Be really bold. Just write it down. Now, fun part begins. Let's take a look at a ton of different slides that I prepared for you guys. And I will share slides now from real decks that landed in my inbox at some point in time. And we will be looking at the decks, at the slides, the different types of slides, and I have some examples. Why do I bring it? Because I believe the easiest way to make your pitch deck better is to get inspiration from others. It's the easiest way, because some people were already putting so much thoughts into how to visualize things, and yeah, we can just simply copy it. No one will ever know, and so we can make our pitch deck way, way better. The pitch deck itself will never get you funded. No one invests in a pitch deck, basically. So it's our foot in the door. We want to open up the conversation with the pitch deck. That's the most important thing. And the thing here is, and the question was also about, for example, doing an inverse pitch deck where you have, okay, this is why you shouldn't invest in a company. I'm not the biggest fan of it because, as I said, for me, pitch deck is about de-risking. Imagine an investor. An investor gets probably, I don't know, 10, 20 decks per day if they're doing it professionally. So they want to check all of them very quickly and see what is interesting for me. So that means, obviously, they are used to a common structure in a pitch deck. This is why most pitch decks look the same. because the information that they want to get to make a call if they want to go forward with it, they want to get it in a structured way. And the structured way, obviously, it's way easier to grasp from them if it's coming always in the same format. So I wouldn't be crazy and to try out some fancy stuff, to be honest, if I'm doing the pitching. So I would use a common structure and adjust that to your company, because that way you can be sure that they can easily grasp it and use it. So no experiments on that one. Also, that means in terms of the video pitch and sometimes also Notion, for example, investment memos. I believe it can be a good add-on to a pitch deck, or for example, when you are talking about the video, you can have a QR code on the first slide or last slide, but I would never just send that. Because imagine also the investor, they have their own investment CRM, and one field in that CRM is the pitch deck from you. So they need to upload the deck to their CRM so that it can follow the different steps. So why would we make it super hard for them to do that if we are just sending the video? Because then the investment associate can upload it. So always just do it as an add-on if you are doing it. Third up, the shorter the deck, the better. Most investors spend around 2 to 3 minutes taking a look at the deck. So it's your job to basically leave out everything that's unnecessary and just focus on the relevant information. Best case, an investor would understand what you're doing just by reading the titles of your slides without looking at all the other stuff. So super, super important, make it short. Now, obviously, the question comes up, and what about all the other information and stuff that I have? Yes, it's fine to have an appendix to basically tell more of the story, but it should be an opt-in from the investor side. If they want to learn more, they can read it, but you shouldn't force them to find the right information by putting 50 slides in the main deck. It's absolutely useless. And second up, once an investor says, yes, I want to learn more about your company, obviously you will have more conversations, and then you can get out all your slides, all your financial modeling and that stuff and show them. So shorter the better. And use the appendix. One thing that I have for you, and you can get it from that URL, but I can also later send it, the Figma file, directly into the WhatsApp group, don't worry. I have a swipe file with, I think there are over 200 real pitch decks in there. And with this swipe file, you can just easily get an inspiration. So for example, if you're thinking, how do I visualize my competition slide? Just go in there, take a look at some of the other guys, copy some stuff for yourself and go with it. So I will send the link later in the WhatsApp group, then you have it. First hack. Structure of the pitch deck. Most pitch decks have the same structure. So we are talking title slide, then you can have a vision slide. You don't need to. If it makes sense, you can do it. Problem, solution, product, market, competition. Then you can have 1 or 2 slides about the business model and the go-to-market, team, ask, roadmap, and CTA in this case. One thing that I just realized that I missed here is the traction slide. Most important slide that I missed in here, traction slide, added. And depending on your business, obviously, sometimes it makes sense for your business. GTM for us is super important. Just make 2 slides out of it. Or for you, it doesn't make sense to have I don't know, competition slide or something. Then it's totally fine. It's just about the regular structure or rough structure that you can start with. Okay, let's go through it slide by slide. And I will share just some thoughts. And if you have questions around it, just jump in right away and ask them so that we can discuss them. So I think for the title slide, it is super, super important. We want to have your name of the company on the title slide. And best case, I would like to have your name of the company on each fucking slide. Because we want to make sure that they remember who you are. And if they are seeing your name more often, it's better for you. So make sure to include the logo or something on the slide. Then second up, if you can have some sort of explanation what you are doing and what value are you providing on the title slide, it would be super good. That's it, your name, photo, and here we go. So this is one example. Second example of a company is, here they have been doing it super, super basic, just value proposition, logo, and everyone knows what's going on for this one. Someone also asked the question about mock-ups. Mockups, super great way. I would always include them in the deck because most people also want to see something visually appealing, and if it looks nice, why not? Just include it and then go with it. So this can also be already on the title slide itself. Example from these guys. So they were doing an investment app. So it's super cool. I could already see on the right side a little bit what the app looks like. And on the left side, they were even using some interesting aspects, some trust elements. Trust elements also always a good way because it's our job to use the deck so that the investor trusts us afterwards. And if he sees, okay, these are big news publications or something, obviously the company seems more legit than if you don't have it. So it's a cool element to include here. And here they were doing something similar. Just using their branding, fun effect, title, here we go. If I would do it, I would always include my face as well and my name, because obviously they should also recognize you if they are going through the deck later on, who was this guy again? And so if we make it easy for them, that's good. Last but not least, title slide. Inspiration here, this is some e-commerce brand. They were doing some active wear or something. So obviously then if you have nice images and photos, real life photos, you can also use them if you have a physical product. Because in the end, they want to see what's happening. And also if you have a physical product, I would maybe even invest in either getting super crazy good photos or 3D renderings or something, because you can use them everywhere and it just makes it so much nicer than a photo that you are taking with your own phone somewhere. Okay, vision slide. As I said, it's optional, you don't need to do it, but sometimes it makes sense if it's something super interesting. So here it was, hey, we want to empower everyone to build meaningful relations easily. And that obviously includes that right now it's not easy to do it. So this is something that we want to change. So where do you want to go? How do you want to do it? And then also best case, why is the world a better place afterwards if you are doing the stuff that you are doing? Most of the time, then we are looking at the problem slide. And the problem slide basically in the first place is about describing the thing that you have seen in the market. And if there's any personal connection to that, it's very, very good to also add your personal note to it. So for example, you were working in banking, or were seeing that there were some issues about how things were handled with new applications in the corporate world. So it's so good if you can tell, I have seen the problem myself, or I have encountered the problem myself, because then obviously it gives some authenticity in the things that you are doing. So you can add this. What's the problem? How relevant is the problem? What does it mean? So for example, if you have any numbers, statistics, make sure to include it. If there's a current solution for it, you can also include it here. And also, who is the person that really has the problem? And why does the problem exist in the first place? I know these are a lot of questions, and you need to really get the core out of it. You don't need to answer them one by one with bullets on the slide, but these are just some guiding questions for you. So here, for example, I think this startup was like a direct to consumer. They were selling paint online or something, because they said, hey, actually no one wants to go to the hardware store and get their paint. It's such a painful thing. Why don't you just do it online? And so they said, look, the service quality in these hardware stores is super, super bad. Everyone hates them. Let's change it. Here, this startup was using more a numbers approach. A lot of investors are analytical people. So if you can show some sort of numbers or how really impactful this problem is, it's also oftentimes a good idea. So yeah, basically a lot of costs out of control, 80% the people hate it. And so put these numbers super big on the slide. I would even say this slide in total already has too much text on it. In general, in 90% of the cases, if I get a deck, it's too much text. So maybe we can cut even this one here out and the one on the bottom or something. But one cool thing that you can see here, and that I would also suggest for you guys, first of all, I would always have an indicator on which slide are we. So problem, solution, whatever, just as a guidance for the person that is looking at it, and using an action title. So instead having the problem as the title in big, just summarize what you can see on the slide, because then I can skip through the deck and I know already, problem is here, we need cloud computing, but the price is high. So there's some issue we need to face. So always do use action titles. They didn't use it, so not good. So they just put the problem in there. It's like a waste of space. The thing that they were using here for the app is just like basic statistics for the problem. So as you can see, different ideas on how to visualize, and sometimes it makes sense to also try out different ones. So maybe just like if you have done it, show it to 10 people and say, okay, which one resonates more, and then you have your answer. This is a slide of pitch.com. So PowerPoint alternative. Basically, what they were doing is they were using a lot of the common logos that people are using anyways, and were saying, okay, I need to connect all of this together to get my work done. Why not have it from one tool? So that's also a cool way, obviously, because the people then are like this. So we want to really have investors nodding with their heads if they are seeing the problem. Last but not least, for the problem slide, I think they here were doing a super numbers-based approach, basically stating, acquiring new customers is getting so much more expensive, and we need to fix it in some sense. Any questions about the problem slide? Okay, good. What's this? Okay, this is the final one that I have. In here, action title on the left, and then stating 3 main core sub-problems. Relations on many platforms, it's hard to deepen them, and accessing information is hard. As you can also see here, the visuals of all the slides that I showed you are very good. So don't be sloppy on the design of your deck, and this is one of the first red flags. If I would get a deck that is designed poorly, and maybe there are typos in there or things are not aligned, I would be thinking, okay, if they are sending me a deck now asking for my money that is poorly designed and has these alignment issues, will they always work like this? So have a high ambition for yourself and high standard for the deck, especially. So make sure it's really top notch, and I have a hack for that later on in the process. For the solution slide, we want to basically summarize what our idea is. And this can be similar to your elevator pitch. So how will we solve the problem? And is the solution that we are suggesting really good? And why do we believe it's good? And how will the customer feel like after using the solution? A lot of you that I've already talked to are mixing the solution slide with the product slide. I personally wouldn't do it, because I feel like it's easier to guide the investor through the deck if I first say in general, okay, there was this issue, like the communication between tenant and the person that is renting the apartment is super hard. So my solution would be, I need a platform to connect the two in an easy way. Okay, understood. So how does it work then? And then we are going over to the product and features. So solution slide, I always have like very high level, and here you can see nice mock-up, just explanation, and then we can move over from there. Here they were saying with the cloud, basically they are a solution to make your cloud usage cheaper by just hosting it on different vendors and then always checking where it's the cheapest. So they were using already a lot of statistics, as in the slide before, because before they said, everything is super expensive, everyone hates it. So here, okay, clear numbers, why it's better. Another solution slide here where we are just showing very high level what the thing is doing. And one thing that you can see in all of these slides that they have in common, little text. Very little text and good visuals. So one core thing also of your pitch deck is, if you have an information in some sort of sense, it's about how you can visualize it in an easy to grasp way. So for example, here it was about notifications that are always popping up from the different tools. Just show them, show what it feels like, because then obviously people are more intrigued to learn more about it. And last but not least, this one here is from pitch.com. So they were basically saying, hey, just a bold statement. We will do a full, complete presentation platform in regards to all of the fragmented tools that you were using before. Okay, so now, after we have talked about the solution, most of the time, let's go into the product. So into the product means now you can shine, you can really talk about what are the features, what are the things that are super, super cool about your product. You can show mockups, you can show flows on how it's actually done, why is it better than the stuff that others are doing, and why is it 10x better? So, as you can see also here, different features are shown. Here as well, different features, always combined with a nice visual. You can also have it without, but it's nicer if you have it with visual. And also here you can always see it's the same sort of structure. Small information, visual. Information, visual. And here's something, it's a little bit blurry, but it was also a cool thing that I saw. So what they were doing for the product slide is basically showing the old way of how something is doing, and on the right side, the new way. So the platform was an investing platform where I could invest in startups, and before it was super, super messy to do all of that in terms of KYC process, wiring the money and everything. And they said, on the left side, this is what it was before, and now with us, new platform, just all in one, we are combining it and making it easier. So visually showing, I don't want the left thing, I want the right thing. Yeah, and also here, just mock-up and stating what you are actually doing. So now, another little task for you guys. So write down, why is your product special in the first place? 3 bullets. What are the 3 main items why your product is special? And then, please a comparison. Where are you now in the journey? And where will you be in 5 years? The market slide. There's one reason the market slide exists, and this is actually showing that the company that you are envisioning can get big enough. As I said earlier, the biggest red flag is if you are only selling to, I don't know, flower shops in Tirana that don't have a website yet or something. Very, very limited market. I don't like to invest in something like this. So we need to prove.
We often hear this about what is the total addressable market and so on. Basically, what is the market? But in many cases, very successful cases, it was a market that didn't exist, or it was very small, but the market grew basically, and nobody could predict that.
Yeah.
So how do you explain that? Any examples of that?
Yes, and this is why I personally, you don't need to visualize it like this. That's the important thing. So for example, if we are thinking about Figma or some design tool, the thing is how you could have calculated it back then is, I mean, you knew how many designers are there already in the world that are using some other tools, or how many marketers are there in the world. And if you are building something that creates a new market, I would create a slide where I put these assumptions down. So I'm saying I don't have a clue if there's like 1 billion, 2 billion, 3 billion, no one cares. But I know exactly there are worldwide 500,000 flower shops that don't have a website. That's the market that I'm going after. And just from the assumption that I'm having right now of what I can charge, this is what can get out of it. So if I'm not sure about the numbers in any specific market, I'm trying to just describe it on how I'm seeing it or why I'm seeing the opportunity. So you can have it like this. You don't need to have it. What are the specifics of your addressed market? And this is what I just was mentioning. You can also put other information in here. So for example, if you realize in your market, okay, the first purchase is super hard to get, but then people will never churn. This is a very important market information. You can put it on here. So that's super, super good. Then I want to have the answer, why do you think it's a good idea to start in this market? Because maybe I believe, okay, flower shops, they will all go online, they need a website, so I believe it's a good business to do and little competition. And also, obviously, this answers a little bit the question if the customers are actually willing to pay. If I'm going into the market where there is a very, very small likelihood that they pay, it's getting a little bit harder. So for them, they were using also the basic structure. You know all of this. Here, I would just make sure the thing that I sometimes see and I don't like so much is sometimes you have your own calculations from your financial model in there. I wouldn't put this in here because most of the time it's absolute bullshit what is in there. So you just write any number, I don't know, in 5 years, 50 million in the smallest circle. Okay, where does it come from? How do you end up with this calculation or something? So I think the downside of having it is bigger than the upside. Here is a good example for the stuff that you were just saying. I don't know why it's so blurry, but they were doing this investment platform. And how they were visualizing the market, because it wasn't existent, they were writing down all the players in the market. So here, for example, it could be 50,000 venture capital funds, 15,000 private equity funds, 10,000 family offices. And just trying to describe by the pure size of the players in the market or the amount, if we can capture some of them, then it will be a significant business. And here they were actually showing it in some sort of like calculation where they were saying, okay, we have some main products. So for example, SPV, special purpose vehicle, a way to invest in startups. If we are getting this amount of customers out of the 10,000 that you have just seen before, we are charging this amount of money, then it's already 7 billion per year. So it doesn't always need to be top down, it can also be bottom up in the terms of the calculation. Okay, competition slide. So competition slide, you all know the different ways to visualize it. You have the table where you're just showing different set of features. Good thing is obviously we are the one defining the categories. So normally what happens, I'm putting the categories down there that I'm really good at. I always have a check mark and everyone else has an X or less check marks than myself. The information that the investor gets out of it is basically, okay, this is the areas you focus your product on. It doesn't say something about if the others are doing good or not. Second one is this one. You always put yourself in the top right. It's the same logic. You are just putting the definition down yourself. So it's always clear, okay, this is what is happening. Here we were doing a mix basically of both of them, and something that I wanted to show in here, they were doing something interesting because they were having a table and they were combining it with some funding data. Sometimes if you are doing something that already exists somewhere else, it could be a good idea to mention, look, there are some companies that raise significant amount of funding and that are doing well, because some investors also want to de-risk themselves. So there are some investors, they like to invest in copycats. I don't know, there's an Uber, works in another geography or super app. Yeah, Rocket, basically, okay, screw it, we are just going to do the same thing. So could be an idea also for you to show some of the things that are overseas to prove that the business model is working. In general, I think for the competition, for me, more important than all of these visuals is an honest assessment of yourself, of what makes you different to the competitors that are out there. So you can say, okay, for us, the most important thing is the usability. Because the usability is so important for us, people use our app more often or stuff like this. Because in the end, everyone just lies on that slide and puts down whatever they want. But if I can learn from you what you're focusing on, it's way more important for me. So try to give context on that slide. For the go-to-market, I think in almost every deck that I've seen so far, there was no go-to-market slide or a bad go-to-market slide. Go-to-market means obviously you are giving information about how you will actually do the things that you are saying you will do. And for me, it would give me a lot of trust if you have a clear plan in place. And if you have already run some experiments, for example, that prove that you can do it. So let's say go to market and you are saying 1 million users next year. Okay, what's the plan on how you will do that over the next 12 months and what are the channels? Let's talk about paid acquisition as an example. If you have run some tests and you can show, look, I did a test, $10,000, customer acquisition cost with that was $1 per user, put the information here and say, okay, I will spend 500K over the next year and my assumption is the price will go up, obviously, but maybe then I can acquire 300,000 users with that. Now I trust you because, okay, he has thought about it or she has thought about it and I can give you my money to do it. And with the go-to-market, also something that is super, super important. Very often, I see a very crowded slide. Crowded with every channel that you can imagine. So founders are putting down, okay, we are doing PR, we are doing influencers, we are doing paid acquisition, we are doing organic content. And then I'm asking them, okay, how big is your team? Okay, 5 people. How will 5 people handle 10 different channels in a good way? So my strong belief is most companies can grow to $1 million in revenue just by one channel and just be very good at one channel. The thing is, most of the time, getting one channel to work is super hard. It requires a lot of effort to get just one channel to work. So it's impossible to get 10 to work at the same time. And if you spend significant amount on the one, the likelihood is way higher that you manage it. And that's totally fine also to show here. Don't be afraid to just show little there. If you have deeper information about that, it's actually good. Also, one very, 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 very important thing. If you are starting your company, you are obviously comparing yourself to other companies. Most of the time, you are comparing yourself to companies that are 5 years or 10 years in the market. So now, if I'm looking at a Slack as an example, they have a podcast. They have blogs every day. They have webinars. They are doing paid ads, LinkedIn, Instagram, influencers, everything. Okay, they are 10 years in the market. They have 1,000 people. Of course they can do it. At the beginning, when they were 5 people, they weren't doing all of this. They were doing one fucking channel and making it work with that. So make sure to be very specific about this and make sure to also focus on the go-to-market channels. In the go-to-market, something that's also interesting is the ICP for you, so your ideal customer. If you can be very specific about that one, it helps a lot. And this is why I was saying a lot to you about finding a niche to start with. So if I know exactly, I am selling to head of marketings that are in companies between 25 to 500 people and then have at least 3 designers in-house, I know how to find these companies and I know how to talk to them. If I'm saying, okay, it doesn't matter, anyone that's doing marketing from flower shop to a huge corporate, my messaging will be bad and I won't reach the right people right away. So ICP. Business model slide. This one is the one that Airbnb used back then to explain what they are doing, and it's pretty damn simple. So they were saying, okay, 10.6 million trips. The average fee, this is data that they were pulling from their platform, is $70 per night at 3 nights. So the revenue that they are generating is 200 million based on the 10% commission. Your business model needs to also be easy to understand. So make it easy to understand how you will earn money. And one question was around, okay, I have 10 different business models. I'm doing service, I'm doing product, I'm doing everything. Sometimes you need to do that in the first place, although I don't believe it's the best idea to do it. It's for sure not the best idea to mention all of them in the pitch deck. So even if you have service revenue or something, I just wouldn't mention it. Mention the most important business model that you have and also the one that you want to grow with the company. No one cares if there's a little bit of consulting coming in to cross-finance some stuff. Here, they were just basically showing their pricing plan. You can also do it. And here, they had a quite funny way to show it because for them, it was about the costs that they are reducing. So their business model is, we are just taking some money of the money that we save you. It's also an interesting approach. Now, most important slide in all of the pitch deck, traction slide. Traction slide, as I mentioned before, is everything that you have done since creating the company. Everything that you are proud of. If you have revenue, put the revenue there. If you don't have revenue, put any other metrics there that you think are viable. So it can be user growth. It can be waitlist signups. It can be, for example, the types of people that are using it, testimonials. And it can even be, if you are in the earliest days, I talked to 100 people about this problem and I learned from the interviews. All of this is traction. The traction slide you should adapt over time, obviously. The more data you get, the more stuff you can show. And also make sure, obviously, that investors will track your old pitch decks also. If you, for example, approach someone again a year later, and then they will check, okay, what did you write in the old pitch deck and what did you write now? So make sure to always have this in line. So for them, they were doing it super basic. They were putting the numbers down. Hey, look, we have been working with so many investors in our platform, and also here again, social proof. Traction slide is also the place where you put customer logos, or for example, if you're already backed by some very good investors, put the logos there, because if I see, okay, wow, they are working with SpaceX or something, I know, okay, that it's not a scam, they are doing something right, there was some vetting of other people before, and then I'm more tended to invest into the company. Best thing is obviously if you can show any nice charts of things that go up. So, I mean, with the charts, you have the opportunity to define if you're showing months, if you are showing weeks, if you are showing quarters. So if you have some sort of data set, I would just take a look in which way it looks the nicest, let's say. The nicest is most of the time if there's anything like a hockey stick or anything going upwards, it's very good. If you have a chart that is flat line or going down, I wouldn't show it. I would show something different. Because in the end, the pitch deck is still our presentation. We can decide what we put in. And then if someone later asks for the data, okay, we will show them. But let's first get into the conversation, then convince them as our personality and our person. Here, customer feedback can also be some traction, because these girls, they didn't have anything yet. So they just had the feedback and the logos. So they were putting this stuff down. And as you can see, it can be very, very different things and very diverse. Then also important, the team slide. As I said, they are investing in your company because they like you, they believe in you, so show them the best side of you. So why should they choose your team? Most of the time, on how you would actually do it is A, you want to show them that you have a clear separation between your founding team. So it's super, super clear that one person is doing marketing and sales. One person is doing tech. There's nothing worse if there are like 4 CEOs on the slide and everyone is doing everything. Doesn't work. Second up, you can use also trust factors there. So if you have studied at a great university, if you have worked at a great company before, put the logo down. This is why always now all the engineers from OpenAI, once they start a new business, they are literally getting funded just because they worked at OpenAI before. And then in the text there, I would try to be as specific as possible about past accomplishments. So I wouldn't write something in there like have been an engineer or engineer at whatever. So rather what I would do is think, okay, if I'm doing an app now as my business, what is a past accomplishment that I can show that will increase the trust in me as a person for building this app? So for example, if I've built an app before at my previous employer that has scaled to 1 million users, I would put down scaled an app to 1 million users before. Or I have done, I don't know, 500 sales calls in 1 quarter at my previous company. So something very specific. These guys from Pitch, they didn't need to put anything down because they just had the craziest standing already before they were raising capital. So Christian Reber, for example, was investing in Notion, but he was also the founder of Wunderlist, and all of these people here were top tier entrepreneurs before, so they were just literally putting their name down and their logo, and decided to also put down the number of how many people they had already hired. So this is also a way to visualize it. For all of us in this round, not the best idea because we don't have this trust yet. So we need to prove them wrong. In here, just one thing, you can't read it right now, but why I wanted to put it down. So Remy and Ulrich, they were founding the company and they did something interesting. They wrote down there that they founded 3 companies before together. All of them failed. And now you would think, okay, are they crazy? Why are they putting it down that they failed 3 times before? But investors loved it because that shows these guys have been going through some very, very hard times together. and they still want to work with each other. So maybe now the luck is on our side. So this was really showing something good, because also oftentimes founder breakups are happening, and this is the worst thing that can happen also for an investor. And someone was asking the question, how do I show the fact that I don't have a co-founder right now? I mean, two things. First of all, I would decide for myself, do I want to have a co-founder in the future, or don't I want to have a co-founder in the future? If I don't want to have one, then you just make the slide about yourself, more space about talking about your accomplishments. If you want to have one in the future, I would mention it here with a very clear plan on how to get that person. So for example, you can say, I'm looking for this specific person. I have already 10 interviews scheduled with people that I'm trying out with. So to make a very, very clear timeline on when you want to have this person. Let's move over to the ask slide. So on the ask slide, basically I want to see three things. First of all, the amount of money that you want to raise. Second up, what will you be investing in? And also there, be super, super specific on what you will be investing in. So I don't like so much if it just says 40% HR, 20% product, 20% sales or something. I would rather see a clear plan where you're saying, okay, 100K of this budget is going to Facebook ad campaigns specifically targeting these people. And then, last but not least, missing on a lot of decks is, where will the money bring us? So if you put down there, I'm raising 4 million and this will get us to 1 million users or something, I'm like pumped. I'm like, okay, let's fucking go. And this is super, super important. So put it in there. Okay, they were raising 30 million, building a global infrastructure. And here, they were also putting some numbers down. But as you can see here on the right side, didn't do a good job on the things that I just said. So it needs to be more specific. Where do you spend the money on? Where will it get us? Last but not least, contact slide. So contact slide, just put your face down there, clear call to action, contact data so that the person knows exactly where they can book the next meeting with you, and you can also use trust factors again. As you can see, another example and another example. So now, obviously, the question will come up, how do you actually create your own deck? Most of you have already. Still, I wanted to share my quick process on how I do it most of the time. So most of the time, I'm starting with the content assembly on how I call it. And I can also send you this document. Before I open up any kind of presentation software, I'm doing it in a document. I'm just have all my questions here and I just put my thoughts down on the different areas. Just put all of it down in this document. Second step, then I build my deck strawman, as I call it. So I open up the presentation tool, and this is not about design, I'm just making it ugly, and I'm just putting the first idea of the content down. Action title, the content, the logos, everything that I want to have. After I have this, I'm mostly starting with a mood board. So mood board for me means I put down slides of other companies that I like. I search, okay, what kind of style should it look like? If you have already your brand kit, obviously your brand kit, and just arrange a little bit ideas on how I can make it visually appealing. So for example, here I have a slide and I really like the flow that they were visualizing. And here linear, I like the website design with a very, very like dark theme and then but clear mock-ups and everything. And once I have the mood board, I come up with specific ideas for slides. Most people don't spend time on this, and I think it's not a good idea. So, as I said before, it's about visualizing information in an easy way. So, obviously, you could write down a flow, 1, 2, 3, 4, 5, 6, put the text, what is happening, but it's cooler if it's just as a visual so that people can grasp it more quickly. So now for each slide then, I come up with specific ideas. So for example, here it could be something, information is merging with some sort of team member or input, then everything is coming together after an AI and I can push it to some other tools. And this doesn't need to look great, it's just like the idea that you want to visualize. And then, last but not least, I polish all of the slides, either myself or I give it to a designer that can actually do it. The finished version that we are having, we have it as a PDF file. And the PDF file we will send to investors. Most of the time I'm sending it before the actual call, because best case the investor also takes a look at it before and comes prepared, so that we don't waste the time me pitching again all the time. So I would always open up the conversation with the investor to give them two options. Option one is, do you want to should I walk you through the deck? Is this what you want? Or if you have already seen it, we can jump into specific areas and you can ask the questions. Because most of the time, these calls are like 15, 30 minutes, and you want to make sure that you can actually use it talking about the product, and then not like 15-minute intro, and then deck walkthrough, and then it will be, okay, I have another call, and they are leaving off. You can use something like DocSend, for example, also, if you want to share it with the investors. Doesn't really matter, they are now used to it. At the beginning they were like, I don't want it, because it's also harder for them to add to their CRM, but also sending it as a PDF is fine. And one thing also, you can be sure that your deck will be sent around from investors. Even if you tell them it's confidential, they will still send it around to other people. So I wouldn't really care if my deck is being sent around, you just need to be aware of it. In terms of the pitch deck design, if you can't design yourself, if you don't have anyone that you know that can do it, just hire someone to do it. I think it's a good investment. You can get quite cheap people on Upwork or any other platform to do it, and then maybe you spend a couple of $100 to get a good design for your pitch deck, and it's worth it, especially if you are imagining we are going out there raising hundreds of thousands of dollars, and the $200 we will get back for sure. So, top 4 learnings for pitch decks. Good pitch deck is about leaving information out. Second up, we want to tell a visionary story, big story where they are like, okay, I want to be part of it. Third up, don't be sloppy on the design, so make it visually appealing. And last but not least, iterate your deck during your fundraise. The first deck that we are putting out, and then we are talking to investors, maybe we realize, okay, no one understands our problem slide, so don't just use the deck over and over again, just like open it again, adapt it, and make it better. Okay. So, really quick, Investor CRM. Investor CRM, I just want to have one place where I store all the information about my potential investors. First of all, that means I want to create a long list. Who could be a potential investor for me? I put them all in here. Can be a Google Sheet, can be a Notion file, doesn't matter. We want to have them all in here. Second up, we want to have some research on them. So we want to make sure that we are approaching them in the right way instead of like mass cold outreach on any investor that is on LinkedIn. I want to say, you would be a great fit for us because you have invested in these companies before, or I saw you are writing about something, so to make it relevant for them. And then in the investor CRM, the investors are moving from the left to the right. Also important, while you are doing it, you want to use it as your second brain. So, you write in everything why you believe they are a great fit. You also write in everything for your notes where you might want to adapt your pitch. So as I said earlier, if it's a product guy, just talk more about your product. If it's someone from marketing and sales, talk more about marketing and sales. You can put your notes down there. And also write down every notes that you are coming up with in the calls themselves. Makes it easier for you to push the process. And also one thing in general, the problem often with fundraising is fundraising gets very, very hard if it drags for a long amount of time. So the best fundraisers are very compressing their fundraise. I know sometimes it's hard, but most of the time it works just better. What does it mean? I would do a lot of preparation. So let's say 4 weeks preparation, I have all of this lined up. And then I start reaching out to the investor that I want to talk to, and I'm trying to schedule as many investor calls as I can in 1, 2, 3 weeks of time.
Is it better to just send the pitch to their formal channel?
So you should, most of the public emails are not so good, and you should try to, in the best case, even find someone that can make you an intro. So I would always try also in my CM, try to get as many intros as possible, because cold is always super hard so that they all even care. I want to schedule as many investor meetings in a short amount of time because the best fundraisers create FOMO. We want to be in the situation where we can be the one deciding which investor we take on. Because then we can say, okay, we want to close it till this specific day, and this is when you have the strengths. If you are coming to an investor and you have been fundraising already for 9 months and you are like, okay, this is the last chance, I don't think they will like it and they won't invest. If you are coming in there, okay, I already have 3 investors lined up, so either you are in or out, then it's the moment when they are saying, okay, now I also want to be in a part of this. So this is why I always try to condense the fundraising as much as possible. Someone asked this question about the deck earlier. Does it make sense to make a deck why you shouldn't invest in my company? I don't believe we should have a deck like this, but I still believe we should answer the question for us. So now please take 1 to 2 minutes and just write down all of the reasons why someone shouldn't invest in your company. Preparation done. So for the process, just 3 things. First of all, the process, I mean like the fundraising process itself. Make the outreach customized. So no bombarding of investors on LinkedIn or something. It's way more efficient to just make it super personalized. Second up, make the process as short and structured as possible. You want to be the one leading the discussions and not just waiting for an investor to come around. Third up, talk to enough investors. Super important. There are many reasons why investors will decline you. You just need to increase your odds of finding the ones that want to work with you. So instead of talking to 20 investors, talk to 100 or more. And as I said, if possible, never without a connection. So if you can get some intro, please do it. In general, there are several groups of investors. So there are active investors and inactive investors, and then dumb and smart, I would categorize it. For you, just make sure to take the ones that are jackpot, so active and smart. Smart and inactive, and dumb and inactive might also be okay, but you don't want to have someone there that is super active, wants to do some stuff all the time, and you don't want to work with them. Because in the end, never choose an investor just because of their money. You will work 10 years or longer with them together, and if you don't like them, also on a personal note, then don't do it. Also, just quickly, one idea. It's super important that one investor check can always lead to multiple more. So sometimes, if you get a check and someone invests 20K in your company, obviously they know other people in the industry, friends, and for example, I invest so much with my friends together. Someone brings a deal, they invest, and they are like, okay, Max, do you also want to invest? Okay, let's go. So make sure that even a small check that you are getting somewhere, or can even be 10K or something, can lead to bigger ones along the road. And also for the people that are believing in you, make sure to use their referral. Ask them for more people. Who should I talk to? And you can do this at the end of every call. Also, if you had a good feeling with any investor, say, hey, do you know 3 more people that I should talk to? And this is super important because it helps build your long list very quickly. Closing. To close the actual deal, one thing, keep the investors updated that you have been talking with. It's nothing worse than, okay, you had a pitch and they showed some interest and then you don't talk to them. Like 1 minute before someone else then wants to sign, you tell them, okay, here I am again. So be proactive with the communication. Get the first commitments. Getting the first commitments is the hardest part. So if you got this, then you can play with it and say, okay, we already have 100K committed, then it's getting easier. Create FOMO. This is what you can do if you are in a strong position. Okay, we have more investors, then we have space in our round, then it's easy to create FOMO. And choose your dream cap table. So really, I would rather take someone on board that I really like to work with, that has super good expertise for what I wanted to do at a lower valuation, for example, than just optimizing for my valuation. So TLDR, good preparation, structured process, right investors. The things that you have noted down today now are these things from today's session. And you can take them really, optimize your pitch to make it better and to make sure that you are ready when talking to investors. If you have any questions around these, feel free to reach out to me and we can talk about it. And just one last thing that I wanted to share with you, because I think it was super interesting example, is a company that I invested in a couple of years back. And they were doing one thing super well, and that was playing the investors in the fundraising process. So I knew these guys just from some events where I was meeting them, so not too crazy. And then they were sending an email to me. And in this email, it's one of the best emails, they were doing a good job because they were saying, hey Max, look, we are doing our friends and family round, so pre-seed. Also with the friends and family, you always feel better, obviously, because, okay, I'm one of the ones in that group, basically. They were saying, Junto, it's the name of the company, we are building the #1 platform for professional upskilling. #1 platform for me shows, okay, these guys have ambition. Investment highlights. So they were giving some highlights on all the different areas of the business. Product, then they were saying, look, market is big enough, 400 billion global B2B education. Then they were using the play where they said role models in the US are doing well. So funded by Sequoia, Tiger, Andreessen, this is what the people raised. Nice, next checkmark for me. And then traction. Okay, 10 weeks in, 50 paying B2B customers, 130K in revenue. So I thought, okay, that's quite impressive for the first 10 weeks, so I got curious. And then they were also doing something interesting. They said fundraising timeline. So they said, okay, little round, family and friends, and later on we will do a big VC round. So in my hand, I was like, okay, now I'm investing at a low valuation, and then I at least have a paper increase, a markup in my shares. Very quickly, because half a year later they wanted to raise from VCs. So, and then they created a crazy FOMO, because they said, okay, 50% of the money we want to raise now, we already have together, and we plan to close at the end of next week. So they were ending the end date already. Obviously, you can only do it if you can be quite certain that you will hit it. But in this moment, I was taking my phone. I'm like, okay, sign me up. I will invest anyways, because I was feeling such a strong FOMO. And in the end, it worked so well. They wanted to raise 500K family and friends. Then they got like 1.5 million from 50 top angels in Europe. So that was super good. And I just wanted to share this real life example of a good email. Cool. I also had their pitch deck, but it's not that relevant right now. I can also share later with you guys, because I wanted to answer some of your questions. So first of all, before I go to the questions, if you want, you can follow me on LinkedIn, YouTube, and Twitter for more content on these kind of things. Would appreciate it. And also you can reach out to me anytime with your questions. That's the first thing. Second thing, Q&A. So I think we have around 10 minutes left. So let me just quickly go through the questions that I have in here. Okay, so what shouldn't you include in your pitch deck? You know everything about your business. You are thinking about your business 24/7. So you know a lot about this. Don't put everything in your pitch deck. Just put the most important information in, and then you can talk about them, about everything in detail once you have the conversation with them. Also, the pitch deck is you presenting yourself in a good way. So don't put the stuff in your pitch deck that makes you look weak, let's say. So I would rather make you look, okay, we are doing good. Must have content. Must have content would for me be traction for sure, specific description of the team, and something that is really important for me, the things that you are telling that you want to do, how will you actually do them? So the go-to-market slide that we were talking about. How will you pull this off? The metrics to highlight is also for the traction slide. If you have customers, if you have revenue, show this. If you don't have, show the things that come closest to it, that you think are the most valuable. Also, if you have great metrics, for example, retention metrics in your app, put them in. We can decide which metrics we show. So that's a good thing. For the projections, I personally, I'm not a fan of it, to add the projections to the deck itself, because in my experience, yeah, it's pure, you just came up with some random numbers, but I would still say, even in the earliest stages, I want you to create a financial model. not because the numbers in there are right, but because it shows what are the main levers, the main drivers of your business. So if I can see in your financial model that there's a lot of paid acquisition inside, I know it's important for you and you have thought about it. Sometimes founders just put random numbers down, okay, next year 2 million in revenue. They haven't even thought about how they will get the 2 million. So financial model is for me to understand your thinking. How long should the deck be? The shorter the better. Most of the time it's between 10 to 15 slides. Then you can have an appendix, but if you can all bring it down to 10 slides would be good. Design versus content. I'm a big fan of having a good design and a good content. On the content side, not too much content. Please reduce the amount of content and rather try to visualize stuff with good design. I also said, please, I would send the deck before the meeting so that they can prepare if possible. And in terms of the ask, I like to include it in the deck just to set some sort of like boundaries of what we are talking about. One thing about this one, and this is what we can also learn from the Junto guys, rather make this number a bit lower than too high. Because it's easy to oversubscribe around. If I said, okay, I want to raise 500K and then I put 700 together from investors, it's very hard to undersubscribe around because then an investor will tell me, you said you need 1 million, now you only have 500K, so you won't be able to pull off your plan. They don't like it so much. So rather put a lower number and then oversubscribe if possible. Okay, let's see. Let's see what else we have. So we have mockups. Yes, we talked about it. Please use mockups, and even you can use mockups that look better than your real product. That's also a fine way to do it. Different services, just show the one that's relevant. Don't show all of them. Then co-founder lease, we were already talking about it. Videos versus Notion versus deck. We also talked about it, that there should be a deck, but you can use it as an add-on. A good tool to record yourself. I mean, simplest way is Loom, but if you want to have it a little bit more visually appealing, there's a tool called Tella, T-E-L-L-A. It's really good. And then we, should we be specific about the budget? Yeah, I mean, I just said, the financial model obviously is very specific about your budget, but you can also be very specific in the deck itself. I like it more to see it specific than to just have 30% on R&D and I don't know where the money is going. Because obviously you know the best where the money is going, but I want to see that you have an actual plan. And in terms of the red flags, and that's maybe the last thing, red flags, thinking too small in the first place. For most venture cases, you need to think back. Second up, doubting yourself is obviously also a red flag. You need to want to be the one that is believing the most in all of this. You need to convince me, so show this. Really, sloppy design on the pitch deck is not good. And also something that is happening very, very often, that the numbers don't add up. So I want to see the same number that is in the pitch deck that is in your financial model. If it's different, I'm like, okay, who was doing the quality assurance on your material, and will it be the same for everything going forward? So, thank you so much. I hope it was good. And any last questions from the round here?
Yes, please. In terms of like evaluation, when you say that, okay, I'm asking for like 500K with an evaluation of, I don't know. So we understand that there are ranges of, for example, pre-seed cannot go higher than $1 million, seed cannot go higher than $50 million, and so on. But how do you properly evaluate your startup in this case?
Yeah, so first of all, I said I would put the ask in the deck, I wouldn't put the valuation in the deck. This is the first place, because once the valuation is in the deck, it is somewhere anchored on a piece of paper, and you don't want that. Because most of the time, how does the valuation is created? The valuation is created by the investors, obviously, because it depends a little bit on, okay, how much money do we want to give you? And depending on that, the valuation is set. especially if you are working with VC investors, because then they will come and say, okay, look, we would invest 500K at $5 million valuation, here's our term sheet. In the earliest days, if you are just raising pre-seed from angels, most of the time these days you are either raising on a convertible or safe note, basically. So some of the discussion about the valuation can be put a little bit backwards to the next round. So this is giving you some flexibility then. And then in the convertible, for example, you just need to define a cap or something, and there you can have a sort of benchmark with other peers of you. Anyone else? Or
what's the type of founder you would never invest in?
so the worst investments that I made were the ones where it was a product-focused founder without anyone selling the stuff. I tend to see people always doing the same mistake. It is fun working on your product. You can work for it for an unlimited amount of time to make it better. It's comforting because you don't get any negative feedback working on your product. But in the end, it's only a business if you can sell it. And so nowadays, I'm always trying to invest into companies that are selling before they actually build it. So if you can actually show there's an interest, then it's also way, way easier to get it done and get the stuff going. Okay, thank you so much, guys. If you have any questions.